Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. That's right. We're looking forward to a big event that we're hosting this coming Saturday, August 20th, 11 a.m. Eastern Time. Let me show that to you right now. Again, Saturday, August 20th, 11 a.m. It's a 4-hour event. My partner, Troy, and I, yes, Troy, that's him right there with the backpack. He's going to tell you why he calls his company Backpack Trader. And I'm going to tell you about one of the craziest trades I ever made in my entire life. Wow, it was .com crash time, and it was absolutely nuts. All right, what I put myself through and the lessons I learned, which I believe can help all of us get better at trading and investing. Speaking of trading and investing, we've got a little mini meme scene going on, don't we? This is not January and February 2021. There's no GameStop going from $5 to $491 in 3-4 weeks. That's not happening. But there is a little meme scene, a little mini meme scene happening, and it has been exemplified by this piece of garbage, Bed Bath & Beyond. Why do I say piece of garbage? Because this is one of the worst companies I've ever seen in my entire life. This company is an absolute dumpster fire. It is a piece of garbage. Doesn't matter though. The stock has gone from $5 to almost $30. Yeah, $30 even yesterday. And that happened because, well, garbage can still float on occasion. But because really it was probably one of the heaviest, if not the heaviest, the most heavily shorted stock in the market right now. So there is a ghost of GameStop coming around, a reflection happening out there. As a matter of fact, one of the same people who helped spark the GameStop craze, it was set up, of course, but who helped spark the fire, Ryan Cohen, founder of Chewy.com, got involved with GameStop, was named management board of directors back in early January of 2021. And that really kicked off a lot of the manic behavior that was going on in that stock. So he put some money into Bed Bath & Beyond a couple of months ago. And now he's telling people that he's going to sell it. And his followers and the mini meme scene folks, they're scratching their head. They're confused. And they're trying to argue with the facts. So what are you kidding me? I mean, he started buying stock over here and averaged down. So I don't know, he's got an average cost of like 10 or 12 bucks a share probably. And it's a 20 something. Of course you're going to sell it. The thing's a piece of garbage. The company's crap. Okay. Of course he's going to sell that. And by the way, when he reads posts like that say, oh, he's not really selling. He's just filing with the SEC, but he's not really going to do it. Look, you're sitting around a poker table. You're wondering who the sucker is. And as soon as you wonder, look in the mirror, my friend, because it's you. He's going to have you holding the bag. Okay, you're his bag man here, everybody. You are Ryan Cohen's bag man if you're holding this stock. No different than those people that suffered through GameStop when it was trading at $300, $350, $400, $450 a share and just kept buying it and holding on to it. You were the bag man there, okay? What do you think these insiders are doing? You think they're in it for you? You think they care about you? You think they're concerned about what kind of money you're making? Come on. Please, that's insane thought behavior. It's absolutely insane. So anyway, the reason that Bed Bath & Beyond isn't going to go from $5 to $500 like GameStop did, a couple of reasons, because it's a much worse company. Second reason is back in January and February of 2021, the Federal Reserve was still pumping $120 billion per month into the financial system. Starting in 2 weeks, they're going to start retracting $95 billion from the financial system. And they've been on a retraction mode since March. Okay, forget about how much they're going to raise interest rates. Big arguments out there. Are they going to raise 50 in September? Are they going to raise 75 in September? That's a part of it, of course, and we should be paying close attention, but that's not the real issue. The real underlying issue here is $95 billion a month in only 2 weeks. That starts in 2 weeks, everybody. So this whole speculative mini-meme scene cannot continue in light of that challenge. So please start to pay attention to what's going on in the markets. Don't be the bag man. And the rich guys, it's what they love. Got to remember this one here. This is one of my favorites. Virgin Galactic. Okay, back in February of 2021, the stock's in the high 40s, and Richard Branson, when it was at 49, 50, 51 bucks a share, he sold every share. He pulled out $1 billion from this thing, $1 billion, and then it just cratered. I mean, it was like a bad rocket coming right back to Earth. Now it's at $6 a share, and he's got his $1 billion. And if you thought that he was some kind of diamond hand and you were diamonding with him, you were his bag man. You were the sucker at the table. Okay, don't be that sucker at the table anymore. Please, please, please don't do that anymore. Okay. So this Saturday, Troy and I are hosting an event coming up. We will show you the value of a trade plan, how to get yourself organized money management wise. We're going to be talking about people looking at taking, smaller accounts, $10,000, $20,000 accounts, and getting a trade plan together, organizing it properly, executing it with focus and discipline. In a couple of years, sticking to the plan has the opportunity of creating a life that you cannot imagine for yourself. Okay, that potential does exist. All right, so away from the mini-meme scene, we've got the stock market itself succumbing a little bit in here to short-term overbought conditions. You can see that demonstrated in the indicators over here. Low volume has been plaguing the market really since the bottom in June. That's been a problem and an issue. And some short-term bearish divergences in the more speculative areas of the market, such as the NASDAQ, the Russell 2000, things of that nature. The S&P, not yet, but that is not quite as speculative as some of these other areas. So when you combine all three factors, what do you get? A little bit of sideways action, consolidation, pullback, and choppy behavior. It should lead to further choppy behavior for coming days or weeks. Does it mean a return to the June lows? Perhaps not that fast. Just have to see how the correction/consolidation unfolds over the next couple of weeks. But it doesn't matter. There's ways to profit regardless of market direction. And we're going to be showing that to you on Saturday. So join us. Click the link right below. Come on board. We very much look forward to having you with us. So a few days ago, we did a little tutorial, I guess, a quick little seminar on gap trading. That was fun. Talk about that. I appreciate you guys hanging around for it. We used Walmart as the example. It didn't actually end up playing out. It gapped up. But here's another possibility. So we have Cisco that gapped today, and we'll just do a quick review of what we went over on Tuesday with Walmart. So the first hour of trading is done. As a matter of fact, we're 90 minutes into the day. In the first hour, Cisco set a range of $49.11 and 50 on the high end. Okay, so $49.11 and $50. It's still at $49.90, so a little bit closer to the high. The trading gap strategy there is if it trades above the high of the first hour, it's a long entry. If it trades below the low of the first hour, it's a short entry. This is kind of a quick scalping trading strategy. It is not to be held overnight. It is not with an expectation that if it goes above 50, it's going to go to 55 or 60. Or if it goes below 49.11, it's going to crater all the way back down and close that gap by 4 p.m. today. That's not the trading system or style. It's just something small and quick. And hey, if you're bored and need a little something to do, something to watch. So Cisco, I think that might be the only one out there that is kind of actively gapping in the large cap space that can create one of the lower risk opportunities using that particular strategy. One of the biggest things that's on my mind lately is the bond market. Okay, we talk about the Fed ripping $95 billion out of the market coming in a few weeks, and they'll be doing that every month for several months. Remember, they were adding $120 billion starting in March, April of 2020. They did that all the way through until November of 21. Okay, they did it all the way through, and guess what happened in November of 21? Guess what happened? Here's the small cap stocks. Look at that. Is it a coincidence? No, of course it's not a coincidence. Of course. And so now the Fed is going to be pulling $95 billion out of the market. every single month. Okay. So we'll have to see how the correction consolidation unfolds. There's been a nice little move from the lows of mid-June up until last few 4, 5, 6 trading days, depending on which index you're looking at. Nice little move. Advanced decline lines reacted well. Volume, not so much. And some other indicators are kind of conflicting with each other right now. But in the near term, the next several days and possibly weeks, looks like consolidation and choppy behavior. But watching the bonds, that's one of the keys right now. Okay. The 2-year was about to break out yesterday. It didn't do it. Came right back in. The 10-year also trading at a multi-day high yesterday for a bit, and then kind of pulled back in. This is it right here. The bond market is what has to be watched very, very closely over coming weeks. All right, that's what I have for now. I appreciate the time. It's always awesome to be with you. Again, this is your old buddy Romulus, and I will see you this coming Saturday. Oh, it's going to be exciting. That's all for now.